Capital Logic. Today's case study, Zappos. How paying new hires to walk away built a billion-dollar customer service culture. We're going to show you exactly how this business model works, where the money actually comes from, and what most analysts miss. Like and subscribe if you want this kind of breakdown every week. Here is what you need to know. Zappos offers new employees thousands of dollars to quit after training, believing that only those who reject the money are truly committed to its unique customer service mission. It sounds crazy, doesn't it? But this isn't just a quirky anecdote. It's a core strategy. Stay until the end. I'll break down 3 lessons from Zappos' playbook you can apply to your business this week. If you want business breakdowns you can actually use, hit subscribe and the bell. In the late 90s, the internet was still a wild frontier. The dot-com bubble was inflating, and everyone was scrambling to figure out what the digital age would mean for business. It was in this environment, in 1999, that a man named Nick Swimmer had a seemingly outlandish idea. He wanted to sell shoes online. Think about that for a moment. Shoes. A product people had to try on, to feel, to walk in. The idea of buying them sight unseen, then waiting for them to arrive, seemed absurd to most. Swimmer's vision was ambitious, to say the least. He wanted to build the largest shoe store on the internet. But he wasn't alone in seeing the potential. A young entrepreneur named Hsieh, fresh off selling his company Link Exchange to Microsoft for $265 million, was looking for his next big thing. Hsieh initially invested $2 million in Zappos, not just as a passive investor, but as an advisor, quickly becoming co-CEO in 2000 and then sole CEO in 2001. He saw something beyond just selling shoes. He saw an opportunity to build a different kind of company, or of customer experience, even if the product itself seemed like a tough sell online. In fact, Hsieh would later invest his entire personal net worth of $3 million into Zappos when the company was struggling, a testament to his belief in its ultimate potential. Early on, Zappos operated like many e-commerce startups of the era. They were a middleman, relying on a drop-shipping model. They'd take an order, and a third-party manufacturer or distributor would ship the shoes directly to the customer. It seemed efficient on paper, but it came with a massive hidden cost, a complete lack of control over the customer experience. Shipping times were inconsistent, inventory accuracy was often a guessing game, and the quality of delivery could vary wildly. This wasn't going to cut it for Hsieh's vision of a service-obsessed company. So, in 2004, Zappos made a pivotal and expensive decision. They would take control of their entire supply chain. They built their own warehouse, managed their own inventory, and handled their own shipping. This allowed them to offer things no one else in online retail was doing at the time. Free shipping both ways on all orders, and a radical 365-day return policy. Think about the psychological impact of that. It completely removed the risk for buying shoes online. If they didn't fit, if you didn't like them, if you change your mind a month later, no problem, free return. This wasn't just logistics, it was a fundamental shift in how they viewed the customer relationship, positioning experience as their ultimate differentiator, not just price or product breadth. But even with a stellar shipping and returns policy, the core of customer service still needed to be exceptional. And that meant the people answering the phones, the ones interacting directly with customers, had to be the best. This allowed them to offer things no one else in online retail was doing at the time: free shipping both ways on all orders, and a radical 365-day return policy. This brings us to one of Zappos' most radical, and perhaps least understood, strategic moves. In 2003, Zappos picked up its entire operation and moved its headquarters from the tech hub of San Francisco, California, to Las Vegas, Nevada. On the surface, this seemed counterintuitive. San Francisco was the epicenter of tech talent, innovation, and venture capital. Las Vegas? It was known for gambling, entertainment, and a very different kind of workforce. But Hsieh and his team had a very specific, very strategic reason for this relocation. They wanted to build an unparalleled call center. In San Francisco, the cost of living was high, and employee turnover in call centers was rampant. It was seen as a transient job, a stepping stone. In Las Vegas, they found a different dynamic. The cost of living was lower, and there was a readily available workforce looking for stable, meaningful employment. By moving to Las Vegas, Zappos could create a call center environment where employees felt valued, could grow, and would stay. This wasn't just about reducing costs. It was about investing in the heart of their customer service operation. They weren't just hiring bodies to answer phones. They were building a culture. Zappos understood that their customer service representatives weren't just order takers. They were brand ambassadors. They were the direct, human connection to the Zappos brand. The move to Vegas was a declaration. Customer service wasn't a cost center to be minimized. It was a profit center, a competitive advantage to be maximized. This decision laid the crucial groundwork for their unique hiring philosophy and the legendary culture that would follow. And that culture was something they guarded fiercely. How fiercely? Well, imagine you've just been hired for a new job. You've gone through the interviews, the onboarding, the training. You're excited, ready to start your career. Then, your new employer offers you money, a significant sum, to quit. This wasn't a hypothetical scenario at Zappos. It was, and still is, a core part of their hiring process. It's known internally as the offer. Introduced in 2008, Zappos would, after new hires completed their initial 4-week training period, present them with a choice. Stay with the company and commit to its unique culture, or take a cash payment and walk away. Initially, the offer was a modest $100. But Zappos quickly realized its power and scaled it up. By 2009, it had reached $4,000. Think about that. For $1,000, just to not work for them. What kind of company does that? What's the psychology behind paying someone to leave? It's simple, yet brilliant. It's a filter. It's designed to weed out anyone who isn't truly committed to the Zappos culture. Anyone who's just there for a paycheck. If you're willing to take the money and run, then you're probably not the right fit for a company that prides itself on delivering wow service and building deep, genuine relationships. The people who turn down that $4,000, the vast majority, by the way, are sending a powerful signal. They're saying, I believe in this company, I believe in its values, and I want to be a part of this culture more than I want a quick cash payout. The results speak for themselves. Consistently, less than 1% of new hires accept the offer. That means Zappos spends approximately $100,000 annually on this program. Now, to some, that might sound like a waste of money, but Zappos sees it as a net positive investment. It's a small price to pay to ensure that 99% of their employees are genuinely aligned with their core values, passionate about their work, and dedicated to the customer experience. It's a test of commitment, a psychological barrier that ensures only the truly dedicated remain. This wasn't just a quirky HR tactic. It was a foundational element of their strategy to build an unparalleled customer service culture. It ensured that every single person who stayed, from the CEO down to the newest call center representative, was bought into the Zappos way of doing things. And this commitment, this dedication to cultural fit, would manifest in ways that completely redefined what it meant to provide customer service. But Zappos wasn't just about getting people to stay for the right reasons. It was about creating an experience that made customers want to return. And this is where the legend truly began. You see, while most retailers were obsessing over price wars and product breadth, Zappos was quietly building something far more powerful, an emotional connection. Their customer service wasn't just good, it was legendary. Think about it. In an industry where call centers are often measured by how quickly they can get you off the phone, Zappos representatives were given a radically different directive. They weren't measured on call times or upsells or even the number of calls they handle per hour. Their metric was simple: deliver well. This meant no time limits. None. The average Zappos customer service call might last 5 to 7 minutes, but if a customer needed more time, they got it. How much more? Well, the longest recorded call wasn't 1 hour or even 2. It was over 10 hours. 10 hours dedicated to a single customer, focusing solely on their satisfaction. Can you imagine? This wasn't an anomaly. It was a testament to a philosophy that prioritized connection over efficiency. They even encouraged employees to personalize interactions, to send flowers to customers, or, get this, to recommend a competitor's product if Zappos didn't have what the customer needed. It sounds insane, doesn't it? But it worked. This relentless focus on service translated directly into loyalty. Zappos's Net Promoter Score, or NPS, which measures customer willingness to recommend a company's product or services, was historically off the charts, often cited in the 80s or 90s. For context, the retail industry average typically hovers around 30 to 40. This wasn't just a number, it was a direct indicator of rabid customer evangelism. By 2011, approximately 75% of Zappos's purchases came from repeat customers. Think about that. 3 out of every 4 sales were from people who had already bought from them and were coming back for more. This wasn't just a business, it was a community built on trust and genuine care. And it wasn't just about shoes anymore. Leveraging that trusted brand and customer service reputation, Zappos expanded into clothing, handbags, and accessories, proving that their model wasn't limited to a single product category. Their early marketing budget was minimal, almost non-existent. They didn't need to spend millions on advertising because their customers did the marketing for them, spreading the word about the company that treated them like gold. This was word-of-mouth marketing at its most powerful, fueled by unexpected delights like free overnight shipping upgrades for standard orders, making customers feel truly valued. This customer-centric obsession, this relentless pursuit of happiness, both for employees and customers, wasn't just a feel-good story. It was a billion-dollar bet that paid off in spades. By 2006, Zappos had achieved $635 million in gross sales. And then, just 2 years later, in 2008, they hit a monumental milestone: $1 billion in gross merchandise sales. $1 billion. This was a company that started with a vision many considered absurd: selling shoes online. They had defied skeptics, outmaneuvered competitors, and built an empire not on price, but on service. And the ultimate validation of this unique, culture-first approach came in 2009. That's when Amazon, the undisputed titan of e-commerce, came knocking. Amazon, known for its ruthless efficiency and customer obsession, saw something special in Zappos. They saw a company that had cracked the code on customer loyalty and employee engagement in a way few others had. The result: Amazon acquired Zappos for approximately $1.2 billion in an all-stock deal. Crucially, Zappos was allowed to maintain its distinct culture and operational independence, a testament to the value Amazon placed on what Tony Hsieh and his team had built. It was proof that culture wasn't just a soft skill, it was a strategic asset capable of driving massive financial value. But let's be clear, this wasn't a cheap strategy. Building this kind of culture, this kind of customer devotion, required intentional investment. It had a hidden cost, yes, but the return was priceless. Consider that offer to quit program. It wasn't just a clever HR trick. It was a significant annual investment. Zappos estimates that the program, which pays new hires to leave if they don't fit, costs approximately $100,000 annually. $100,000 paid out to people who don't work for you. Most companies would balk at that. They'd see it as a waste of money, a line item to be cut. But Zappos saw it as a net positive investment. Why? Because it filtered out the lukewarm, leaving only those who were truly aligned with their core values and service mission. It ensured that every single person who stayed was genuinely committed to the Zappos way. And that commitment started even earlier in the hiring process itself. Zappos' hiring process is notoriously rigorous, and for good reason. They understand that a single bad hire can poison a team, or worse, damage the customer experience. That's why culture fit interviews account for 50% of the hiring decision. Think about that. Half of whether you get hired at Zappos isn't about your skills or your resume, but about whether you embody their 10 core values, whether you're a cultural match. This isn't just a casual chat. It's a deep dive into your personality, your values, and your approach to work. They even require all new hires, regardless of their department, even executives, to spend time on the phones, taking customer service calls during their initial culture immersion training. It's a powerful way to instill the customer-first mindset from day one. Tony Hsieh famously believed that investing in employee happiness and culture would naturally lead to better customer service and, ultimately, higher profits. It was a counterintuitive business model in a world obsessed with cutting costs and maximizing short-term gains. But Zappos proved him right. They built a company where employees were engaged, customers were delighted, and the bottom line thrived. So, what can we learn from this extraordinary journey? What principles did Zappos uncover that allowed them to turn a simple online shoe store into a billion-dollar legend? Now here are 3 lessons from Zappos' playbook you can apply to your own business. Lesson 1. Culture is your competitive moat. Define and consistently reinforce your core values in every aspect of your business, from hiring to customer interaction. Zappos didn't just talk about culture, they built their entire hiring and onboarding process around it, even paying people to leave if they weren't a fit. That's how you create an unshakable foundation. Lesson 2. Service is the ultimate marketing. Invest in exceptional customer service as your primary marketing channel, aiming to wow customers to drive word of mouth and loyalty. Think about it. Zappos spent virtually nothing on traditional advertising, yet they became a household name. Their customers did the marketing for them, simply by sharing their incredible experiences. Lesson 3. Empower employees for customer delight. Give your employees autonomy and resources to solve customer problems creatively, trusting them to build genuine connections. Zappos didn't script calls or limit their reps to 5 minutes. They gave them the freedom to send flowers, recommend competitors, or just chat for hours because they understood that a happy customer is worth far more than a rigid rulebook. If you want more business breakdowns, you can actually use subscribe. I'll see you in the next one. That is Capital Logic's breakdown of Zappos. How paying new hires to walk away built a billion-dollar customer service culture. Every business has a hidden architecture. We find it, we explain it, and we show you what it means. Subscribe and hit the bell so you never miss a case study. We will be back with another one shortly.